"We have different banks for people like you," said the manager, looking directly at Ibrahim Traore. But when the account statement arrived, he realized that this different person had the power to bankrupt their institutions. The marble floors of Credit Suisse's flagship Paris branch gleamed under the crystal chandeliers as Ibrahim Traore walked through the revolving doors on that cold November morning in 2023. He wore a simple dark suit, his red beret tucked respectfully under his arm, carrying a leather briefcase that contained documents worth more than the entire building around him. The receptionist, a young woman with perfectly styled blonde hair, looked up from her computer screen with a practiced smile reserved for wealthy clients. But as her eyes took in Traore's appearance, his dark skin, his modest clothing, his unfamiliar accent when he spoke, her expression shifted almost imperceptibly. "Good morning," Traore said in fluent French, his voice calm and measured. "I have a 10 a.m. appointment with Monsieur Laurent Dubois, the regional manager. My name is Ibrahim Traore." The receptionist's fingers paused over her keyboard. She glanced toward the elevator where several well-dressed European businessmen were waiting, then back at Traore. "One moment, please," she said, her tone noticeably cooler than it had been seconds earlier. She picked up her phone and spoke in hushed tones. Traore couldn't hear the exact words, but he caught enough fragments to understand the conversation. "African gentleman says he has an appointment. Should I call security? Are you sure?" After several minutes, she hung up and forced another smile. "Monsieur Dubois will see you now. Please take the elevator to the 15th floor." As Traore rode the elevator up, he reflected on the journey that had brought him to this moment. 3 months earlier, his economic advisors had recommended diversifying Burkina Faso's foreign currency reserves beyond the traditional French banking system. The country's unexpected discovery of lithium deposits, combined with new partnerships with China and Russia, had generated unprecedented revenue that needed sophisticated financial management. Credit Suisse had been recommended by several international consultants as one of Europe's most stable and professional banking institutions. Their Paris branch specifically handled African government accounts, and their reputation for discretion and expertise had made them the obvious choice for managing what would become one of the largest African sovereign wealth deposits in European banking history. The elevator doors opened to reveal a luxurious reception area with floor-to-ceiling windows overlooking the Champs-Élysées. A secretary, an older woman with silver hair and an expensive suit, gestured toward a leather chair. "Monsieur Dubois will be with you shortly," she said, not offering coffee or water, as Traore had observed being offered to other clients during his brief wait in the lobby. 20 minutes passed, then 30. Traore checked his phone. The appointment had been confirmed just yesterday, and he had arrived precisely on time. Other clients who had arrived after him were being escorted into offices, while he remained seated in the waiting area. Finally, the office door opened and Laurent Dubois emerged. He was a man in his late 50s with graying hair and the soft physique of someone who had spent decades behind expensive desks. His handshake was brief and perfunctory, his eyes already scanning over Traore's shoulder, as if looking for more important matters to attend to. "Monsieur Traore?" Dubois pronounced the name with deliberate awkwardness, though Traore had provided the correct pronunciation during the appointment booking. "Please come in." The office was a monument to European financial power. Persian rugs, oil paintings of former bank presidents, and a massive desk made from what appeared to be a single piece of mahogany. Dubois settled into his chair with the casual authority of someone accustomed to being the most important person in any room. "So," Dubois began, not inviting Traore to sit, "my assistant mentioned you're interested in our international services. What exactly are you looking to do?" Traore opened his briefcase and placed a folder on the desk. "I represent the Republic of Burkina Faso. We're looking to establish a sovereign wealth management account for our mineral export revenues. The initial deposit would be approximately $16 billion US. Dubois's expression didn't change, but something flickered in his eyes. Surprise, perhaps, or disbelief. He opened the folder and began scanning the documents. Official government letterheads, mining contracts, revenue projections, and letters of credit from major international banks. 16 billion, Dubois repeated slowly, as if testing the words. That's quite a substantial amount for a country like Burkina Faso. The casual dismissal in his tone was unmistakable. Traore had encountered this attitude countless times since taking power. The automatic assumption that African countries couldn't possibly have legitimate access to serious wealth, that any claims of substantial resources must be exaggerated or somehow illegitimate. Yes, Traore replied evenly. Our recent lithium discoveries, combined with new gold extraction technologies and diversified export partnerships, have generated unprecedented revenue growth. We're seeking a European financial institution capable of managing these funds professionally. Du Bois leaned back in his chair, a smile playing at the corners of his mouth. It wasn't a friendly smile. Monsieur Traore, I think there may be some misunderstanding here. Credit Suisse serves a very specific clientele. We typically work with established wealth, old European families, multinational corporations, governments with proven financial track records. He gestured vaguely toward the window. Perhaps you might be more comfortable with one of the development banks? The African Development Bank has offices here in Paris. They specialize in your type of clientele. The words hung in the air like a slap. Your type of clientele. The meaning was clear. Even without explicit racial language, Du Bois was categorizing Traore not as a head of state or a potential client with $16 billion, but as an African who should know his place in the European financial hierarchy. Traore felt a familiar anger rising in his chest, the same feeling he'd experienced countless times growing up in a world where European arrogance and African dignity existed in constant tension. But he kept his voice calm, professional. Monsieur Du Bois, perhaps I haven't been clear. This isn't a development loan or aid package. This is a commercial relationship. Burkina Faso has $16 billion in verified assets that require sophisticated management. We're offering Credit Suisse the opportunity to earn substantial fees from these services. Du Bois's smile widened, becoming openly condescending. Of course, but you must understand, our due diligence requirements are quite rigorous. African governments often have complex political situations, regime changes, corruption allegations, international sanctions. We can't risk our reputation on unstable partnerships. He stood up, effectively ending the meeting. What I would suggest is that you work with one of our subsidiary institutions. We have partnerships with several banks that specialize in emerging market relationships. They would be much better equipped to handle your particular needs. The dismissal was complete. Du Bois wasn't even pretending to take the proposal seriously. In his mind, this was simply an African leader with unrealistic expectations who needed to be politely redirected to institutions more appropriate for his kind. But as Du Bois moved toward the door, clearly expecting Traore to follow, something unexpected happened. Traore remained seated and pulled out his phone. "One moment, please," Traore said, dialing a number. "I need to confirm something with my financial advisors." The call was to Dr. Sarah Chun, the former Goldman Sachs executive who now served as Burkina Faso's international finance consultant. Her voice was crisp and professional when she answered. "Dr. Chun, I'm at Credit Suisse Paris with Monsieur Du Bois. Could you please confirm our current liquid asset position for him?" Traore put the phone on speaker. Dr. Chen's voice filled the office with clinical precision. As of this morning, the Republic of Burkina Faso holds $16.2 billion in verified liquid assets across multiple international banks. This includes $14 billion in mineral export revenues and $2.2 billion in strategic reserves. All funds have been cleared through international anti-money laundering protocols and are available for immediate transfer. Du Bois had stopped moving toward the door. His face had gone pale. Dr. Chen continued. "We've also received preliminary approval for an additional $12 billion line of credit from the Bank of China, secured against future lithium extraction rights. Are you ready to proceed with the Credit Suisse deposit?" Traore looked directly at Du Bois. "Actually, Dr. Chen, I'm not sure Credit Suisse is the right fit for our needs. Monsieur Du Bois has suggested that we might be more comfortable with their subsidiary institutions." There was a pause on the phone. Dr. Chen's voice, when it returned, carried a note of confusion. "I'm sorry. Did you say subsidiary institutions? For a $16 billion sovereign wealth account? That's unusual. Most major banks would consider this a flagship client relationship." Du Bois's mouth opened and closed without sound. The color was draining from his face as the reality of his mistake became clear. $16 billion wasn't just a large account. It was the kind of deposit that could make or break a regional manager's career. The fees alone would be worth hundreds of millions to the bank. Dr. Chen, let me call you back, Traore said, ending the call. He looked at Du Bois, who was now standing frozen by the door. You were saying about different banks for people like me? The silence in the room was deafening. Du Bois seemed to be calculating rapidly in his head. The commission he just lost, the questions his superiors would ask, the career implications of turning away a $16 billion client. I think there may have been a misunderstanding, Du Bois stammered, his earlier arrogance evaporating. Perhaps we should sit down and discuss this properly. But Traore was already closing his briefcase. No, I think you were quite clear about your bank's position. Credit Suisse serves a specific clientele, and apparently, heads of state from Africa don't qualify. He stood up, straightening his jacket with the same dignity he'd maintained throughout the humiliating encounter. I'll be sure to mention your excellent customer service to my colleagues in the African Union. I'm certain they'll be interested to know Credit Suisse's policy regarding African sovereign wealth. Du Bois's face went from pale to ashen. The African Union represented 54 countries, with combined foreign reserves exceeding $400 billion. Word of this incident wouldn't just cost him one client. It could damage Credit Suisse's reputation across an entire continent. Please, Monsieur le Président, Du Bois said, the title finally emerging as the full weight of his error became clear. I apologize if there was any confusion. Perhaps we could start over. But Traore was already walking toward the door. I think your first instincts were correct, Monsieur Du Bois. We do need different banks. Banks that judge clients by their assets rather than their skin color. As Traore left the office, Du Bois stood alone among his expensive furniture and prestigious paintings, realizing that his casual racism had just cost his bank the largest single deposit in its African operations history. Within hours, word of the incident would reach Credit Suisse's executive board in Zurich. By the end of the week, it would become a case study in how prejudice could destroy business relationships worth billions. But the story was far from over. As Traore emerged onto the Champs-Élysées, he was already planning something that would make Du Bois's humiliation seem insignificant compared to what was coming next. 3 days later, financial markets across Europe began experiencing unusual volatility. It started small, a few percentage points here and there, barely enough to notice amid normal trading fluctuations. But by the end of the week, a pattern was emerging that made financial analysts across the continent very nervous. African countries were systematically withdrawing their reserves from European banks. Not just Burkina Faso, but Mali, Niger, Chad, Senegal, and 8 other former French colonies. Billions of dollars were being transferred to banks in China, Russia, Turkey, and surprisingly, several smaller European institutions that had built reputations for treating African clients with respect. The financial press initially attributed this to normal diversification strategies. But then, the leaked audio recording surfaced. Someone had recorded Du Bois's conversation with Traore at Credit Suisse. The recording was professionally edited, highlighting the most damaging moments. We have different banks for people like you, your type of clientele. African governments often have complex political situations. The recording went viral across African social media platforms within hours. Hashtag Credit Suisse Racism began trending worldwide. African news networks picked up the story, playing the audio alongside footage of Traore's dignified exit from the bank. But the real earthquake came when Traore held a press conference in Ouagadougou, broadcast live across Africa, and streamed globally. 3 days ago, he began, I experienced something that millions of Africans encounter when dealing with European institutions. The assumption that we are inferior, that our money is somehow less legitimate, that we should be grateful for whatever scraps of respect they choose to offer us. He played excerpts from the recording, letting Du Bois's words speak for themselves. The assembled journalists, African, European, and international, listened in stunned silence. This is not about one bank or one manager, Traore continued. This is about a system that views Africa as a source of raw materials and cheap labor, never as an equal partner in global finance. Today, I am announcing that Burkina Faso will be withdrawing all government funds from European banks that maintain discriminatory practices. The announcement sent shockwaves through financial markets. If other African countries followed suit, it would represent a fundamental shift in global banking relationships worth hundreds of billions of dollars. Traoré wasn't finished. Furthermore, we are establishing the African Financial Dignity Initiative, working with our continental partners to create banking relationships based on mutual respect rather than colonial nostalgia. Within 24 hours, the leaders of 12 African countries had publicly endorsed the initiative. The president of Ghana announced a comprehensive review of his country's European banking relationships. Nigeria's finance minister called for a new era of financial partnerships that respect African sovereignty. Even South Africa, despite its complex European ties, expressed support for dignity-based banking relationships. Credit Suisse's stock price plummeted 8% in 2 days. Other European banks with significant African operations saw similar declines as investors realized the potential scope of the withdrawals. The European Central Bank issued a statement calling for calm and continued dialogue between European financial institutions and their African partners. Laurent Dubois was fired within a week. The official statement cited failure to meet client service standards, but everyone understood the real reason. A single conversation driven by racial prejudice had cost his bank $16 billion and potentially damaged European-African financial relationships for years to come. But the most dramatic moment came when Credit Suisse's board of directors, desperate to contain the damage, flew to Ouagadougou to personally apologize to Traoré. The sight of Swiss banking executives in expensive suits standing in the presidential palace of one of the world's poorest countries, offering public apologies for their employees' racism, became an iconic image of shifting global power dynamics. Traoré received them with the same dignity he had shown in Dubois's office, but he was clear about his terms. Credit Suisse would need to implement comprehensive anti-discrimination training for all staff, establish an African advisory board for their continental operations, and commit to treating African government officials with the same protocol reserved for European heads of state. The bank agreed to all demands. They had little choice. The alternative was watching other African countries follow Burkina Faso's lead in withdrawing their funds. 6 months later, at a conference on global finance in Dubai, Traoré reflected on the incident that had inadvertently launched a continental movement for financial dignity. When that manager told me there were different banks for people like me, he said to an audience of international bankers and finance ministers, he was more right than he knew. There are indeed different banks, those that judge clients by their character and assets, and those that judge them by their skin color. Africa is increasingly choosing to work with the former. The speech received a standing ovation, not just from African delegates, but from financial professionals worldwide who understood that Traoré had fundamentally changed the conversation about respect and equality in international banking. Laurent Dubois, meanwhile, had found new employment with a small regional bank in provincial France, handling local business accounts worth thousands rather than billions. His former colleagues at Credit Suisse, when asked about the incident, would shake their heads and mutter about the $16 billion mistake, though they knew the real cost had been much higher than any single account. The recording of his conversation with Traoré had become a case study in business schools across Europe and North America, used to teach future bankers about the intersection of prejudice and professional failure. Students would listen to his condescending tone and casual dismissal of a head of state, then examine the financial consequences that followed. But perhaps the most significant outcome was the broader transformation in how European financial institutions approached their African relationships. Banks that had previously treated African officials as supplicants seeking favors began recognizing them as clients with substantial assets and sophisticated needs. The Credit Suisse incident, as it became known in financial circles, marked the beginning of a new era in African-European banking relationships. It demonstrated that African dignity was not just a moral imperative, but an economic necessity in an increasingly interconnected global financial system. For Traoré, the personal satisfaction of proving Dubois wrong paled beside the broader implications of the incident. A single conversation driven by racial prejudice had inadvertently catalyzed a continental movement for financial respect and equality. Sometimes, he reflected, The most powerful responses to discrimination weren't angry confrontations, but calm demonstrations of strength that forced others to acknowledge their own ignorance. The marble floors of Credit Suisse's Paris branch still gleamed under the same crystal chandeliers, but the conversations taking place above them had fundamentally changed. African officials now received the same red carpet treatment as European ministers. The bank's African operations had not only recovered their lost deposits, but expanded significantly as other institutions learned from Credit Suisse's expensive lesson in respect. And somewhere in provincial France, Laurent Dubois processed local loan applications, occasionally wondering what his life might have been like if he had simply treated an African head of state with the same courtesy he showed to European clients. The answer, worth $16 billion and a career in international banking, would remain forever beyond his reach.